Hi friends, this is Kishore. Welcome back to my channel. Today's topic is it good time to buy stocks? This is a very big question. So before answering this question, I believe looking at the map before the journey begins helps us to know where the signals are and where we need to yield, and if there are any dangers, what are they? And today's we'll go through business cycle, sector rotation, global liquidity, Fed fund rates, seasonality charts, bonds, and finally the stocks and ETF I'm looking at. Hope you like this video. Let's jump into the show. This is the business cycle. In my last video, I showed this one. It has 6 stages. Stage 1, 2, and 3 are come under economic contraction. Stage 4, 5, and 6 come under economic expansion. So during expansion, we need to sell based on this chart tells sell the bonds and sell stocks and sell inflation assets like um, real estate. And this business cycle, I feel like we are in transition between stage 6 and stage 1. And I also explained about the reason in my previous video. And this business cycle influences the sector rotation of the stocks, and the sector rotation takes place based on the economic conditions. So if you see here right now, financials and real estates are going down. Based on that, I can tell we are in an early recession. The reason for thinking early recession is when the Fed fund rates rises sharply, sooner or later we see based on the history there is a recession happen because of yield curve inversions. And also during yield curve inversion, banks start tightening the lending standards so that they do not approve the loans, either consumer loans or real estate loans, that are easy as they do before. So which makes the credit crunch, and then which causes the global liquidity crunch. So, and also I feel bond market is very important before looking into the stock market, because bond market market is very huge when they compare to the stock market. I'm looking at the junk bonds. This is a junk bond chart. It is forming a bear flag. It is a monthly chart, and right now it is at very good support level. But if it breaks, it can go a lot down because of the bear flag is like a 20 points flag. So it can go up to 70 from the 90. And this is a high yield bonds. Right now, this is also at a very good support level, and also it is also forming a bear flag. And and if it breaks again, it goes again another 20 points down. But we need to look into these bonds, because bonds helps us to know what the stock market do in coming months. It's a leading indicator for the stock market. And this is a SPX chart, monthly chart. And the black box is the JPM color for this quarter. JPM do a options color options for every quarter, and that helps us what is the SPX range, the max high and max low it can go in that quarter. So based on that, right now SPX is very near to the higher bound of that JPM color, and also it is very close to the 5 SMA, 5 month SMA. And if you see, there is a red dot in the 2011. Um, that is like during at the time 2011 June, almost the same time, there's a debt ceiling issue. Whatever right now it is happening, it is very sensitive. The equity market is very sensitive to that debt ceiling issue. If it not happens as it expected, it goes a lot down. So during 2011, stock market went down almost 20%. So I'm not saying this will happen again now also, but I'm saying the what are the probabilities and how sensitive the equity market to the debt ceiling. And this is a seasonality chart of S&P 500 index. It tells about based on the last 20 years, it tells about how in each month how that S&P index performed. During May and June, you can see it made a not lower lows but lows it made. It tells like for the last 3 weeks of May and last 3 weeks of June, it made a lows. And this is the data from Wall Street Journal. Every week they release this data. It tells about what is the PE ratio, current PE ratio of Dow Jones Industrial and Dow Jones Transportation and Russell and S&P and Nasdaq, and what is the PE ratio in the 12 months back, and what is the PE ratio next coming 12 months. So based on this, it tells the market may be in the sidelines or stay here, or it may little go down, and it is not predicting anything. From here it goes up. So based on my business cycle and economic cycle charts, financial sector is making lows. And if you see here, the seasonality chart also saying during May and June, financial sector is making new lower lows. So if it happens, the stocks I'm looking at is this is an XLF ETF for the financials. Right now it is at very good support level. If it breaks, I have a first support level and the second support level where I may thinking it may bounce there. If not, it may go a lot down. And this is a KRE. It's a regional banks ETF. This is also very good support level right now, and there are first level and second level support because I'm based on the seasonality chart and based on the current market, I'm thinking it may go a little down. So I have first level and second level supports. So where I'm thinking to get some. And this is an ARE, Alexander Real Estate REIT, and it formed a head and shoulders topping pattern. Head and shoulders patterns happens during the at the top of the cycle. If it the pattern confirmed, then the target price it can go is the measured target is 75, up to 75 to 80 level. And if it really goes there, then it's a very big good chance to bounce from there. And finally, it's tough to time the market. So based on the sector rotation and bottoming process, it's take a position, small positions, and then um, learn from that and do the dollar average, and then move along with the market. So that's all for today. Hope you like this video. If you like the video, please hit the like button, and if any of your friends looking at the same similar kind of content, please share the content with them, and please subscribe, or you can watch my other videos in my channel. And please leave the comment your feedback in the comment section. That helps me to know what you're feeling. Thanks for watching. Bye bye, see you.